morning, guys. May 6, 2020, Wednesday. Not a whole lot of changing in the market today, besides clear evidence that we are getting extra close to a waterfall move to formation in the markets overall. We're making this assumption, observing all the move 11 creations across the board, pretty much in everything that you look at right now, which is similar observations that we have witnessed before the market collapsed 30% not so long ago. So the history seems to be repeating itself, while most of the market participants think that everything to the negative side has already been priced out, and therefore there is no reason to panic, which is ideal circumstance when the markets could panic, when everybody is sort of least expecting it, thinking everything's been calculated out to the downside. So with that said, short the hell out of the market this morning, guys. As the economy reopens, we think there's one little aspect that institutional investors are really not paying as much attention to, and they really should, and that is, as the economy reopens, this one little aspect, all the businesses reopen, and what if nobody shows up? What if the customers that they expecting after reopening, what if they don't show up? You're open, but nobody's there. Hello? Anybody there? Nobody's here. Guys, this is a crazy circumstance that the market is not pricing in yet. And this is exactly what's going to create the next leg lower. Just as some of the conversations I had with some of the traders yesterday saying, well, but Leonardo, gold, we should buy gold. Gold is the safe haven. And based on the charts, I said, yeah, it's the common misperception that gold is a safe haven. As we know, if you've been watching our videos for the last few years, we have been bullish on gold since it was at $1,200 when everybody was bearish. Now everybody's highly bullish on gold. Guys, you don't want to be highly bullish on something when everybody else is highly bullish on it. That typically does not represent a good risk reward. So short-term wise, it makes sense to look at the chart. So if you haven't watched yesterday's video, make sure you review it. But basically, we've compared the chart of gold to the chart of US dollar. I've specified a clear correlation, guys. And so if you're trading, you really want to pay attention to the short-term developments on the chart, which yesterday we've said gold is going to drop despite of the general consensus in the marketplace. That's going to prove that gold actually in the reality is not a safe haven overall. What the market is telling us right now is the safe haven is the dollar. So you could see the market sell off. You could see the market actually spiraling lower, just as what's happening pre-market with the chart of gold. And this is really a picture-perfect moment here. This is a Kodak moment for how gold is predicting the market crash, which is exactly the opposite of what everybody's telling you to do. You would never think that anybody on Wall Street or CNBC or Bloomberg will ever fucking tell you, oh, gold is dropping, therefore market is dropping. But yet, that's what we told you is going to happen yesterday, and we're going to show you the chart of gold in just a second that's going to point to how the market is going to look today. So with that said, guys, interesting composition in the market that VIX actually retesting the 31. So as many of the market participants are thinking, well, VIX failed the 40, now it's dropping. Actually, this is a highly bullish move for the VIX because at this point, understand the basic concept. The more times something like, it doesn't matter whether you're looking at a commodity, VIX, or a particular stock, the more times it gets closer to a certain level and it retests it, the lower the probability it's actually going to break it. So the fact that VIX is retesting this 31 level per market is actually highly bullish because right off that 31, it could bounce off like a basketball in a three-point competition shootout, and it's going to hit the rim being the 40, where the VIX was just hitting a couple of days ago. So we've got a bullish composition for the VIX, bearish gold compositions. We've got a lot of things that we believe, based off looking at the charts, that the market is not pricing in, and therefore any bullish momentum higher should be interpreted as a shorting opportunity of a lifetime. So let's roll. But Leonardo, hold on, what about oil? We're going to get to oil in just a second, okay? So with that said, you want to short the hell out of gold. You want to short BKNG, Tesla, Amazon. You want to short all the casual suspects that we've been reviewing in the last few videos. But there is one there's one bandit out of the bunch that is actually going to make it on the call side today, and that bandit is BYND. Man, this highly speculative stock is about to fly to the moon again. And what you want to do, guys, it is simple. You don't need a ton of trades. You don't need 10, 20, 30 trades out there. You just need a couple of good trades. It's going to make you a shitload of money today and tomorrow. So with that said, just buy some BYND calls. This fucking thing can go to 130 today. I'm going to show you exactly what we're observing in BYND. So gold, move to, guys. Gold is the safe haven, possibly, but not today, and not tomorrow, and not short term, based off the long time frame charts, okay, which you should be doing if you're studying the charts divergences course. You should know that gold is about to drop to about $1,480, $1,500. And the signs are omnipresent here. Your move 11, move 11, move 11, move 11 resolves in the move. What starts as a move 11 but finishes off as a move 2. That's pre-market. How many times, okay, how many signals does the market need to give you in order for you to position yourself? See, this is a slow flowing river right here that results into a waterfall. We've covered that on the chart of S&P. And basically, when you're looking at this is what we're saying. This is what S&P is doing. And the fact that gold is doing this pre-market, this is what the market is going to do within probably first hour of the trading session. It's likely to do this and then have a sharp sell-off. So use the gold chart as your indication for what the market is going to do next. With that said, there's one critical aspect you should know about the gold chart, and that is the 1690 or 1687 level to be exact. Gold in the last few days have visited that level and rebounced out of it. Now, if gold actually breaks below 1685, you do want to go extra heavy on puts, on S&P 500, on NASDAQ. You want to buy a shitload of puts. Okay, so with that said, pay close attention to /GC. Look at the oil, look at the gold futures in order to make your estimate of when to actually go extra heavy. Basically, the underlying condition is such: if gold breaks 1685, it is likely to end up for the week at 1650, 1630. The market will sell off as a result of that. Now, bullish on oil, guys, this is a damn bullish chart in the last few days at all. It goes from all the way here, about 12, 15 level, to all the way to 26. So if you're not looking at multiple time frame charts, you may actually regard this as a highly bullish move. You know, you can't blame me when you're looking at the price action. You see some just keeps moving higher and higher and higher. Guys, I mean, yeah, it looks freaking bullish if you look at the last few days and if you just look at the daily chart. But if you try to break this chart down, really what you got a situation is where oil is bouncing exactly to the level where all the good news and all was already priced in. It's now facing a major resistance level. Now, when we take a look at the closer chart, if you thought oil was bullish, think twice, because it just created two back-to-back move 11 formations, okay? And this one pre-market starting to begin to look like the chart of gold. So when I'm saying we're observing 11 type formation moves all over the board, okay, and it is confirmed not just on some stocks, not just on the indexes, not just on the commodities. It's basically universal move right here. It is a universal move of a top. So you want to take the put side while the market is topping, okay? And an easy way to trade this, guys, is you split the expirations between this week and next week to take advantage over this silly market. Again, today we're tracking for a 211 formation. Basically, expect the market at the open to slightly make a move higher. Again, to about 2880 level, just as yesterday. After that, expect this stuff to happen by the end of the day. So pretty much yesterday's move was a topping move. And today, we're likely to get another topping move. But it could accelerate instead of being an 11 into a move 2, which gives you a much higher profitability on the setup of the trade. So short to 2880 level. There's a snapshot from yesterday, but the levels haven't changed, right? So the market keeps trying to move higher. It stalls out, and it's likely to stage a sharp reversal as pointed out by the slope of the sharp sell-off. We've pointed that this was going to be an indication of a further sell-off developing. Now, there is one stock that we mentioned we're highly bullish on. That is Bynd. Against all the odds, this stock could go to the moon. Pre-market, guys, it is at $110. And this thing could actually move once the market opens to the magnitude of about $10, $20 higher. But the options are going to be rather cheap. Why? Because the stock has not been at 120, 130 level in a while. And it actually got a strong catalyst with the meat shortages. Everybody's going to be jumping all over this thing. So this one's got a very strong catalyst to actually propel itself higher. So expect institutional investors, based off the current market conditions, to buy the hell out of this thing. And the valuations don't matter. We don't trade stuff on valuations, guys. We trade stuff based off the charts, based on the institutional money is going, and institutions are going to be buying the hell out of Bynd today. So that's what you want to do. You simply want to buy calls on this thing and ride it to the moon. Next market move for today, again, it's 2:11. The psychological clock is at 0, where nobody thinks the market can drop. Ideal conditions, because option premiums are cheap. You want to buy puts now before they appreciate in value and skyrocket. So based off the sequence, we've got 10, 3, 3, 4, 11, guys. With the VIX hitting the bottom, there's an interesting formation on move 11. We show a behavior of a 6, which is a double negative. May 5th, this is how 11 move looks yesterday. Right here, guys, you got pretty much a picture classic move 11. The market opens and closes within 2 points. Okay, so pretty much opens and closes at the same level. Perfect pyramid formation, intraday, triple top situation. Thing of beauty. Okay, now what you got going on here is another way to look at this. The sharp slope, okay, of sell-off actually happens between the hours of 3 and 4 p.m. This is a typical characteristic of a move 6 behavior. This points to further spirals lower in the market over the course of the next 48 hours. 2-day sequence is 3, 4 actually. Supposed to say 4-11. This is how 4-11 looks on the chart. Basically gap down. Here's your move 4. Here's your move 11. It's time to buy some puts. 5-day sequence 10, 3, 3, 4, 11. Basically, the market is trying to stage a recovery in a move 4 formation, but it fails. It creates a move 11. Of course, for those of you that are blinded by the price action, you still want to buy damn calls. But this is exactly the time to buy some damn puts. Okay, the positioning of the slopes on the 5-day move actually points to a 0, and that what I mean by that is I circled this. Look at this as a 0. So this 0 is likely to replicate itself on a lower level right here. So we can actually easily go beyond 2771 over the course of the next 48 hours. So by Friday, we could be at 2700, which is very tough to believe when you're currently looking at the market. You're like, Jesus Christ, Leonardo, it's a 2880. Man, what are you talking about? 2700 seems highly improbable, but based on the position of these slopes, okay, guys, it is highly probable. Okay, it is highly probable that we're going to have a mirror image of this appear right here. And basically, it's going to put us easily at 2720 by Friday. So the stiffness of the slopes, we've talked about that in yesterday's video, guys. So if you didn't catch that, make sure you go and review that. Here's the slope on the way higher. And the slope on the way lower happens at a much steeper angle. So this was the move we were predicting yesterday before the market opened. That's exactly what we got by the end of the day as a result of that 6 behavior going into the close. So TRO fades, but on the VIX, it can easily reignite itself. So today could be the day of a move 13 in the VIX. Huge reversal to the upside by the end of the day in the VIX. Guys, be ready. Position yourself to trade like a rock star. I'll catch you on the next trade soon. Let's trade.